If you believe in long-term growth in the U.S. information technology sector and think that some of the largest growth stocks are going to continue to do well long into the future, then the ETF we're going to go through today is right up your alley. Now, this ETF is up over 35% year to date and up over 700% as far as ETF price since inception. The ETF that I'm talking about is the Vanguard Information Technology Index ETF, or ticker symbol VGT. Now in this video, we're going to dig deep into this monster growth ETF and explore all it has to offer to investors who seek massive growth fast. Now we're going to go over all this and more. Right after you please drop a like in this video and subscribe for more content like this in the future. Now high growth ETFs or exchange traded funds like the one that we're going through in this video are quite popular among investors for several reasons. The first reason being that the potential for high returns within a short amount of time. High growth ETFs typically focus on companies or sectors, in this case technology, that have the potential for significant growth, again in a relative short amount of time. And this is because these ETFs often invest in companies with disruptive business models or expanding markets where investors are attracted to the potential for high returns if these companies perform well and experience significant growth. The other reason why these high growth ETFs are so popular, in my opinion, is the fact that they offer diversification. Now, ETFs offer investors a way to diversify their portfolio by gaining exposure to a broad range of companies within a specific theme or sector. For this instance, high growth ETFs specifically invest in a basket of companies that are expected to have high growth potential. Now, the Vanguard Information Technology ETF was created in around 2004 and, like I said earlier, is up well over 700% as far as ETF price. But to dig a little bit deeper into this ETF, the Vanguard Information Technology ETF seeks to track the investment performance of the MSCI, which is the U.S. Investable Market Information Technology 25 by 50 Index. Now, this is an index of stocks of large, medium-sized, and small U.S. companies in the information technology sector. Now, this sector is made up of companies in the following three general areas. First, internet services and infrastructure companies, including data centers and cloud networking, and storage infrastructure, companies that provide information technology consulting and services, technology, hardware, and equipment, including manufacturers and distributors of communication equipment, computers and peripherals, electronic equipment, and other related instruments. And as you can see right here, this is the sector breakdown shown on the screen. Now, as far as VGT's exposure, obviously the majority of the ETF is all in the technology sector, but as far as individual company exposure, this is why this ETF, in my opinion, has the most potential to really rocket when the technology sector is on the move, because the top 10 holdings are companies like Apple, Microsoft, Nvidia, Broadcom, Salesforce, Cisco, Accenture, Adobe, Advanced Micro Devices, and Oracle. Now, some more underlying facts about this ETF that are good to know is the fact that the expense ratio is 0.10%, so definitely on the lower end of things as far as expense ratio to own an ETF like this. Now, another thing that's sort of interesting is the fact that VGT also does pay a dividend. Now, it's a pretty small dividend with a current trailing 12-month dividend yield of just 0.7%. And it's also important to note that if we look at VGT's historical dividend payouts over the past 5 years or so, there hasn't really been all that much dividend growth as far as this ETF. For example, back in 2020, the ETF was paying around between 60 and 80 cents per quarter, it looks like. And as of the last few quarters in 2023, it looks like we're pretty much right along the same lines. But of course, the reason being is that this ETF is a growth machine. This is an ETF that has a massive wide range of trading. For example, in the last 52 weeks, VGT is traded at $291 as of the low and $447 as of the high. And to give you more perspective, at the beginning of this year, VGT was down around $100 from where the ETF's price is at currently. Now, what's really crazy is the fact that year to date, the VGT ETF has returned 35.55%, where the S&P has returned 13.60%. So obviously, because of the high growth companies within the VGT ETF, there's going to be a lot of potential when the market does move up. On the last year time frame though, 365 days, VGT is up 25.60%, SPY is up 14.59%. On the last 3 years, VGT is up 58.24%, and SPY is up 44.24%. And to zoom out a little bit further, on the last 5 years, VGT is up 134%, while the S&P is up around 59%. So with this all being said, does this massive monster of a growth ETF in my particular portfolio? Now that's a good question, and I have been considering adding some VGT to my portfolio as of recently, just because I still am very bullish on technology, and with everything going on currently with artificial intelligence, I do think that there probably is some more upside to the sector. But for me personally, because this is such a high growth ETF, if and when I start a position in the Vanguard Information Technology Index, it will definitely be small purchases, most likely fractional purchases, that I make over a long, consistent basis. But I want to hear what you guys think down below of this VGT ETF and all it has to offer. Is this information technology ETF something that you would add into your portfolio? And if not, what are some other extremely fast-growing ETFs that are higher beta that you specifically have your eyes on? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks for stopping by, and I'll see you in the next one.